Welcome to our Hurst Cycles webinar for the 12th of December 2016. My name is David Hickson and I'm very pleased to be joined today on the webinar by Alain Vauthier, who is a Parisian, or he lives just outside of Paris in France, and has been a Hurst Cycles trader for many years. His trading started, or his interest in financial markets started with an interest in Gann, I believe, and he then discovered Hurst Cycles in 2006. And his particular interest in Hurst Cycles, or his particular approach, I should say, has to do with the very interesting topic of Hurst Cycles envelopes. So we're going to be speaking today about those Hurst Cycles envelopes and discussing how they can be used to inform your trading, and can be used to highlight the cycles that are working in the markets. They're a very different approach. It's a very interesting subject, because although Hurst himself came up with the concept of these envelopes, the Hurst Cycles envelope approach is a fairly distinct approach from much of the Hurst Cycles discussion that we have in these webinars. So it's going to be a really fascinating subject for us to delve into. As always, before we actually get to the interesting stuff, I need to ask you to please read and make sure that you have understood these disclaimers. Let's say hello to Alain. Can you hear me, Alain? Are you there?
Yes, I hear you.
Okay, thank you. Thank you so much for joining us. Let's get started, and let me pull up your PowerPoint. Alain has very helpfully provided us with a PowerPoint of slides to go through to introduce the concept of the Hurst Cycles envelopes. And so we'll start going through that. The first thing to be said about Hurst Cycles envelopes is that he wrote about these envelopes very much in his book, The Profit Magic of Stock Transaction Timing. And Alain, this is a quote that you've taken from chapter 4 of that book, Profit Magic of Stock Transaction Timing, page 69, and here he starts discussing the use of these envelopes, and I don't think it's necessary for me to read every word there. You can see it for yourself. But he presented stock charts, and he presented charts before and after the addition of the envelope bounds. Envelopes are really simply a line above and below price action, which include most of the price action. And as it says in this quote from that book, the addition of these constant width envelopes brings out and stresses the cyclic price-time relationship on the chart. So they're very useful for highlighting the cyclic action. Is there anything else you'd like to say at this point, Alain, about Hurst's?
Yes, we can say that the point is about constant widths. He never substantiated, Hurst never substantiated why constant widths. Brian Millard, who follows him, never substantiated to why. You can find in Bollinger book, chapter 4, I think, a very interesting chapter about the history and the development of envelopes, constant widths and proportional widths, about the history and development of envelopes in technical analysis, just for those who could be interested. Yes, in other words, there is no. I think my remark is that there is no. I can say no methodological or logical explanation of why he chose this kind of envelope regarding to other way, as Bollinger done with standard deviation or percentage and so on. So we have no explanation of the logic why he chose this kind of envelopes.
Right. Yes, and it's a question. It's a question that people often ask is, why are the envelopes constant width? So as Alain's saying, there isn't really an explanation for why they're constant width, but it's the way that Hurst envelopes work. Constant width means that the envelope remains, I should say, the distance between the upper line and the lower line of the envelope remains constant in terms of price. Whereas many envelopes, such as Bollinger Bands, rather use a percentage price change as their width. So the result is that the Hurst envelopes, which are constant width, have a very particular look, and we'll be looking at some of these charts, and you can see that the height of the envelope, the width of the envelope, from the upper to the lower line remains constant. Let's move on and take a look at our next slide. We're just going to quickly mention it here, but yes.
So this is a new Sentient Trader, a new feature about envelope built by David. The point to notice is that you see that you have no estimation or forecast or build of the lagging part of the centered moving average, because the envelopes are built on a centered moving average and of various duration or various period, and David has not up to now built the end of the envelopes. That is a point we could discuss much later or in another webinar.
Yes,
because it is an important point, but it is not the main point.
Okay.
We have not to focus on this point. Okay.
All right. Yes, because these envelopes are produced by calculating a moving average. That's what the envelope is. It's a moving average, but it is displaced into the past. And so the result of doing that is that, as you can see, each one of these lines ends sometime in the past, and we are left with a gap between the point at which the line ends and the current price action. As Alain mentions, this is a topic that is probably going to require some discussion, and Brian Millard, the UK British based author who wrote about envelopes extensively, spent a lot of time writing about different ways of filling that gap, and it's a really big discussion. We're not going to have it right now. We might, if there's time, get into that discussion a little bit later in today's webinar or in a future webinar. But the point is that the best approach to start with when you're working with envelopes is not to fill the gap at all, because any filling of that gap that you're going to do requires some kind of estimation or some kind of guesswork, or estimating what is really happening to that line. So the best way to start is by simply leaving the gap there, which is why we've done that in the new feature that Sentient Trader has in it, in terms of plotting these envelopes. And in our next slide, you can just see a little bit of detail as to how these envelopes are set up and defined in Sentient Trader. I see William has said extrapolation. Thank you, William. That was the word I was looking for. It requires some form of extrapolation to take those lines forward. And there are lots of different approaches and different methods, and there are pros and cons to each one. But the way in which we're starting working with these envelopes in Sentient Trader is to not actually extrapolate the envelopes forward at all. So this is how you set up the envelopes in Sentient Trader. You define the average length, which is the length of the moving average that is used to calculate the envelope, and then you can displace it back in bars. Now the correct way of doing this, according to Hurst's definition of these envelopes, is that you would displace the moving average of the upper and lower lines. The envelopes, you would displace them back by half of the wavelength that you are using. So you can see in this example here, that's exactly what is happening. But that is an adjustable setting in Sentient Trader, so that you can play around with different displacements of your envelope lines if you like. It's a possibility. Let's move forward. Okay, sorry about that. Alain, do you want to speak a little bit about this slide where Hurst presents his envelopes?
There is nothing special. We can talk about other envelopes later. The next envelopes slides are just to show you that Hurst used envelopes even in the course.
That's right. So he wrote about his envelopes in the Profit Magic of Stock Transaction Timing book, and also in the Hurst Cycles course. And these are various screenshots from those books, and also from the Hurst Cycles course. It might be useful just to very quickly mention this is a screenshot from the Cycles course. I think I'm correct in saying. Yes. So this is from the Cycles course, and Hurst speaks about the Dominancy envelope, which is basically an envelope around price, an upper and a lower line, which represents the dominant cycle that is moving the markets at the moment. And he speaks about this Dominancy envelope as a wave period divider. Excuse me a minute, I'm just going to have a quick sip of water. Sorry about that. So he speaks about the Dominancy envelope as a wave period divider, and mentions that all the shorter wavelengths are contained in the Dominancy envelope, and all the longer wavelengths are summed into the Dominancy envelope centerline. What that means is that all the shorter cycle vibrations are contained within the envelope. So when we look at an envelope, and we can go back and we can see examples of envelopes here, the shorter vibrations are contained within the envelope, and the longer vibrations are exhibited or shown in the movement of the longer envelope itself. Okay, and as Alain says in this slide here, in the Cyclitec course, all the graphs actually show these envelopes. You can see there are envelopes for what you call the Dominancy envelopes in all of the graphs in the Cyclitec course. So, Alain, let's start speaking about your approach to envelopes. And this is a point at which I should mention what Alain has done, and Alain's approach is a development on Hurst's original idea.
It is not exactly the same thing as as Hurst has done. Just the two variables are the time, the duration of the envelope, and the constant width factor. So, but which is interesting is to see that Hurst is always a little nebulous in words, because he used the term channels, bands, and envelope for the same thing. As the same thing he used sometimes in the book, the term for components, waves, and cycle. That's an interesting point we could discuss later.
Yes.
These envelopes are really Hurst envelopes. Because Hurst never explained how to calculate the constant width factor. Just because it was not possible for him and more for his customers or readers, he used bands of tissue or of paper. So we cannot do that, and it is the reason why I have used a Gann, what they call the Gann twist, for this constant factor. I will explain you later how to determine this constant risk factor and why. It is just to show that in this case of averaged Rocketdyne, you have it is a good explanation. It is a good graph because you have a cyclic. It's a LS word. You have a cyclic. What is the name of it? Well, okay, a cyclic mode. That's the word of LS. You see a cyclic mode, and so you show the graph show a 6 year in green, the big in green. You see the 6 year envelope. The brown envelope is a 1 year envelope, and the ochre, which you see not very easily, is a 6 months envelope, and the blue one is a 6 weeks envelope. But in that case, you do not need really to have 6 weeks because it doesn't help really. But in that case, you see that within a 6 year envelope, you can say that on a longer term, because you have 40 years. The first data is from 1981 up to 2021, so 40 years. You have, you can say that on a longer term, the fluctuation of price is within an envelope of 6 years, and within what we can see that later, but within a fractal of price, with a price range of 0 to 25. So when you build the envelope, you divide the price range 25 by 8. It gives you it's the octave of Gann. Gann octave is 3.125, and it is how you build the 1 year, the brown envelope. The 6 year envelope is you double the factor, and you have 625, which means that the 6 year moves fluctuate within a 12.5 amplitude.
Right.
And the way you, this system, you will see later, this system is very slow, either in duration, that means time parameter of basically 256 days, points, 8, 32, and eventually for longer term, 6 times 256, which means 1,536.
Okay.
It is very stable with this kind of time duration constant width. You can master, I should say, 95% of all financial elements.
Right. Okay.
Okay, so we can. Is the next slide.
Yes, let's move on. I should quickly just point out that you're speaking about these envelope as 6 years. Is that the displacement? I mean, I beg your pardon. Is that the length of time that is used for the average?
The displacement is 3 years.
Right. Yes.
6 years is the 6 years is the calculation for the moving average, the central moving average with a displacement of 3 years. So in this graph, you see two things. You see the different price range from 0 to 50, and you see some cyclic mode from let's say, I don't know, it's let's say 2000 or 1997 year, but you see that it doesn't take into account the first part, because for that you have to reduce the envelope up to, for example, I should say 12.5, or no, even late 6.25, 6.25, which is you divide the first part to have a better look.
Okay.
For you at the beginning, because in 1973 you have not reached 50. So we will see that later. It's but
Right.
It is a situation now.
Okay.
So we can go to the
we'll
next,
go ahead. Right. So the width of the envelopes obviously needs to be adjusted when price enters a very different scale. There
when
we go.
price double.
Yes.
So you have the same kind of envelope. Just to show you, to give you a taste, so you can follow next slide.
Right. And its application to different timescales. I see Hub is saying you should probably use a logarithmic scale. Indeed, using a logarithmic scale would show the details, would it?
It is not a logarithmic scale, it is arithmetic scale.
Right. But if we were to use a logarithmic scale, then obviously we'd see more of the detail at this lower end. Yeah. Let me here we go.
You can see them there.
So this is the S&P 500.
So the S&P 500, you are in the same logic, you know. So on this graph, I put at the time, because I collected some various graphs for this presentation. You see something like T3 in blue and B3 in red. I borrowed the idea from a trader called Trend on a site, on a Hurst discussion we had, and it means bottom, B for bottom and T for top, and it means that you have the price have touched or slightly over, well, a little over the third three envelopes, you know.
Right.
So this way you can rationalize and hierarchize the moves.
Okay.
So you can also, with the bottom, the same bottoms or tops, you can also draw valid trend lines.
Okay. So you're using the points at which they touch the envelopes.
Okay, so we can go to
right.
Yes, to build valid trend lines of the same order, you know, of the same degree or nature, we can say.
Right. Okay.
Okay, this is an intraday trading, intraday graph on the DAX 5-day, 5 minutes. The platform used is TradingView from FXAM. So you see that you can, with the same structure, it means 256, 128 and 32 for the calculation of the central moving average. You can build the same kind of envelopes, even for day trading. And on the left part, under DAX performance, you have the depth of the envelope. So the envelopes here is 72.5. You see, which means that the depth of the parameter of the envelope is 72.5, which means that the brown envelope, the 256 envelope, has an overall depth of 125 points. The oak envelope, the 128, has a depth of the half, 62.5, and the blue envelope, the 32 envelope, has a depth of 32.5.
Right.
Which it isn't. in the system, you will see later, is that you deal always with the same numbers. So very quickly you you can go and work without computer, I would say. If you have no computer, it's not a problem. It's not a real problem to build an envelope with a graph.
Yes. Okay. So once you've worked out your price levels, those ratios remain fixed and they don't change.
Don't change.
Okay.
We will see why later.
Here we go. Here's a 1 minute.
Next slide. It's same day, I think. I don't remember exactly. It's you see a cyclic mode. You know, to use an LR term. So in 1 day, 1 minute, you have with the same parameters. You have this graph. Which shows clearly the cyclic mode, at least for the blue envelope.
Yes, right. You can see it clearly. Okay. So let's speak about Gann.
I first began to work with Gann in '98, and it works with these two main concepts: the squaring of price and time and the law of vibration. And as I used that up to 2006, I met Hurst at this time, and I used this concept to build rationally the constant twist factor, because I had the experience before, and as soon as I have read Profit Magic to build on Excel envelopes, I use this concept to build the envelope. We can see the next graph.
Yes, the squaring of price and time.
One of the concepts, because there is no real, from my point of view, there is no real Gann theory. There is concepts and tools. One of the concepts of Gann is the squaring of time and price. I think some of you have already heard the Gann angles and the 45-degree angle. In fact, it is not a 45-degree angle, it is a 1-by-1 angle. The 1-by-1 means 1 time unit by 1 price unit. It is only a 45 angle if you draw a square. If you draw a square.
Right.
On your computer, it is not, because your computer is not has not a square, but it's a parallelogram or a quadrilateral. You know. So in fact, the key understanding is to understand that you have one price unit, 1 time unit angle. Blue, the thick blue angle you see, a line you see from the low of 25 to the top of 75. This is a way, that's the famous Gann angles, and this is an approximation of an approximation of the speed and acceleration you can see on the fluctuation of price of a financial element. Because all what Gann does was only approximation. Tools at the time, very efficient, because you had not a computer, calculator, and so on. He has developed tools which are approximate. Just to give more information, when you use these angles, you can create groups of shares or indexes which have this position. I mean, when you are above for Gann, when you are above the 1-by-1 angle, market is in a strong position. When you are under the one by one angle market is in a weak position. But this is you can have various positions at the same time in for the same financial instrument, because you can have a long-term position at the same time, a mid-term position and a short-term position, which could be different. But this allows you also to create groups, which means financial instruments which are in the same position at the same time. That's an example. Okay, we can. So for Gann, yes. For Gann, sorry, could you go to the former slide?
Yes, yes. Sorry, there we go.
About that the squaring. Why is the squaring? Well, the squaring. When you say when price meet time or time meet, right? The most important angle for him. It is the most important, but it means I think I took time to understand that. It is not because it is the most important that you reach in or you stay there a long time. You can wait for a directional change at that time when price meet time. That is one of the concepts of Gann, when price meet time.
Okay, and that's the importance of that one by one angle.
Yeah, and also the one by one angle is a moving average.
Right.
And at the end of his life, around 50 up to 1955, Gann used the moving average term for his Gann, for his one by one angle, because at the time moving average was fashionable in transaction in technical analysis.
Right.
So but before he used the term angle, and after that he used the term moving average too.
Okay. Okay. And I see Marco says that some technical analysis software solves the Gann representation distortion by by relating the time scale to the price scale. That's absolutely right. Okay. The law of vibration.
So the second concept of Gann, important concept, is the law of vibration. It is very nebulous. I mean, it never explains really what is the law, how to calculate the vibration. He just said or wrote many times that every financial instrument is most sensitive to a specific vibration. And up to now, you can find on the net or many people who have discovered the secret of Gann and can sell you something for up to $5,000. But yes. In fact, it was never really explained. But we can see how he has treated this thing practically.
Okay.
So, in fact, it is known as the Gann lines. That's the first, what I call Gann version 1.0. It is dividing the price range by 8. Basically, at first, he took a low, the range between the low and the top, and has divided this range by 8. It works too, relatively good. It was what I call Gann version 1.0. You can see that with other words as trading Gann lines, trading lines or price lines. It depends on the book you have or the software. It depends.
Okay.
So that's the first. So you can see it is not really So Gann version 1.0, it is, but it is the same principle. You can see two interesting things that with Johnson & Johnson from the beginning, and it's also, which is interesting, 2020 up to now, 2018, which means 40 years. So you have the division by 8 of the time, 6 years. 48 years is 8 times 6 years, and you have also this kind of division by 8. And in the Gann version 2, you have the various horizontal line, price line. I call them support and resistance line because it is how they work. And you see different colors, and you see kind of numeration, which is the baseline, the line at 0 is called the baseline, is 0.8, and up to the 8.8, which has a property. The guys who developed this thing attach properties to each line. Main properties are the baseline is the support and resistance, and the main support and resistance is at the middle of the price range, here 62.5. After that, you have the green, between the two green lines, it is called the hesitation zone. After that, you have the two in red. It is also a resistance. 31 here at 31.25, and here at 80. I don't see really
93.75.
because of my 93. That okay. So it is to understand that you have for each horizontal price line, you have properties for the resistance and support. We'll discuss that also later. You see that. You see also that, for example, for Johnson & Johnson since 48 years, you have a kind of, let's say, parabol in a parabolic move in yellow. We will explain that later.
Okay.
So we can see the next.
Gann version 2.
Yes, in fact, so Gann version 2. Why Gann version 2? Gann version 2 is in fact was developed, or developed, I don't know, but publicized by someone, some of you have heard about, is T.H. Murray, and with the famous Murray math. The idea was to improve on the first version, because not the flow, but the limitation of the first version, the division by 8 between the low and the top, is that it is not stable. Every time you have a new low or you have a new bottom, you have to recalculate the lines, the octave, because the division by 8 gives you an octave, and 1/8, and you cannot compare the move when you have a new grab with a new low. You cannot compare both grabs. The scaling is different. So they have developed a new structure using fixed price range between, for example, 0.10, as you see, 0.10, 0.100, 0.1000, 0.10,000, 0.100,000. You can also go on the left and use the 0.1 to 1. So it is very interesting because you just have to move the decimal on the right or on the left. And you see on the column properties, you have the same properties for each lines.
Right. Yes.
this is what we can call auto-similarity. They call that fractal of price. I don't know if it's really a fractal, but the meaning is it is the same. Even
Yes.
at different scale, it is the same. You have no parameters. You cannot distinguish a circle from one circle from another circle, a cycle from another cycle, or here these numbers. So it is
Right.
very easy to master very quickly.
Okay.
So we can go to the
The musical
same.
octave.
Yes. So very quickly, people have thought about the relation between the octave and the musical octave. So you can see here the connection between the it is from the book of Tony Plummer, the law of vibration, which in fact doesn't really explain the vibration for markets. It is written in his book, but there is some interesting things. You see the octave, the musical octave, the internal ratio of the musical octave, and the Gann octave. That is division 8 of between 0 and 1. You see some very close relation between these things.
Right.
And I remember that somebody on the forum has written about sonic waves.
That's
And
right.
so it is linked to this point.
Yes. Very
So
interesting to compare them.
There is similarities. It is not 100% exact, but it is. So it is also from the book of Tony Plummer, and you see the something about the musical octave. I am very illiterate in music, in theoretical music, but from what I have understood, I don't say it is the explanation, but I never saw before the book of Tony Plummer, who is also a cycle trader, and has written about cycles. I never saw before an explanation about why the properties of the horizontal lines. This my view, I say it is his views and my views,
Right.
is that you see in red you have, for example, at 64 or 256, you have a direction of the progression of the musical, and this is why we can do a parallel between the properties, because the 256 could be considered as the eight lines, the last horizontal line, whose
Right.
property is ultimate resistance. 64, where 64 here is the 1/4 of the range, and it is the 2/8. The red line, one of the red line, you see, it is also a resistance because you have a deceleration of the move. It is. I don't know if it is a reality, but it is the best explanation I have found between the octave used on the market and the musical octave.
Right. Yes, and the properties of those lines.
But I am not a specialist, and it's just so the system is stable, simple, and efficient. I only when I read the book of T.H. Murray and the explanation from another guy who clarified a lot of points, whose name is Tim Krusel, it was written in the system that if you are in a price range of 0 to 10, you can eventually go to 25% higher, whatever price range you were. You can go to 12.5 and 125 and so on. So
Right.
I say, okay, no problem, it works. Generally it works, but there was no explanation. In fact, the explanation is that your first price range is 0 to 10, and you divide by 8. But if you see the second one, if you go from 0 to 100, you have your division is at 12.5. So there is I have called that a hesitation zone or a phase of transition. When you are above 10, you don't know really if you go up to the first line of the second price range, 0-100, or if you go higher up to, for example, 25, and you have a move, you don't know if you go over. It is why you have a phase of transition. It is an hesitation zone also in the price move. I talked with David on Saturday, and I gave him the example of Facebook. You remember Facebook? Facebook was share, EPO was at 38. 38 is roughly 37.5. Yeah. It means when I made an analysis at this time, it means that you go up to 100 or 125.
Right.
That's your margin of development. And it means when you invest in Facebook, you will know bracket, you can your gain, your potential gain, maximum potential gain is 65 or 87.5, and it was the case after 3 years. Now you can see that Facebook, it is 150, and it is now in the second. It is between 0 and 50.
Right.
But at the time, so when you invest in a share or in a financial instrument, you can have an estimation of what is your maximum potential gain. We will use that in trading with risk reward possibility.
Okay.
So we can go to the next slide.
Right.
So the Gann version 2, I call that like that, gives you some information. You can compare the price movements within the same price range, more than having to change your scaling between a top and a bottom. You can also compare the price movement between different financial instruments, fluctuating inside the same price range, 0.10, 0.100, and so on. And you can create groups, from my point of view, which is a refinement of the Hurst concept of commonality, which means what have financial instruments in common.
Right. Yes.
But it's another subject, but just to give the information.
Yes, an interesting point. Okay, determining the constant width factor.
Okay, so it's interesting, but how we do that? So here we have Corning glass for 40 years. It is 8 times 5 years, and in adjusted close. Say we are this the long-term fluctuation is between 0 and 100. Okay, it doesn't even like that. You see that you have not a lot of information given by this this envelopes, you see, because the scale, it's a scaling problem. So you have to change your mind, and you take the your start point in 2002.
Right.
2002. You see that you have, but before you change from the side, you see that you have two, we can say two parabolic move from 81 to up to 2002.
Yes.
An up move and a down move, more or less parabolic. The parabolic move, the down parabolic move, which was because Corning dropped from 99% up to, I think I remember it is 0.72, 0.72
Yes.
in 2002. This down parabolic move is called by Martin Armstrong a waterfall event, and you have that very often. For example, you have exactly the same move on France Telecom at the time, or you name Orange. You have also Deutsche Telekom. You have Alcatel-Lucent. You have Alstom in front. You can find this kind of drop from 90, let's say 90%, very often.
Right. Amazing.
Okay.
Shall we move forward and see the... There we go. That's from 2002.
Mm-hmm. You can do it. So if you start from 2002, if you apply, so the on the previous slide, your price range was 100, 100 divided by 8 is 12.5, but doesn't work. It works long term, but not on this mid-term chart. So you see that your top is under 25. You have a baseline, you can say at 0, and here at 20 divided by 8 is 3.125. You used this constant width factor, the octave, this constant width factor to build the brown envelope, the 1 year envelope, 260, the envelope 260, 1 year, you can say. And you used to build the 6 year envelope, you double the constant width factor, and you have what you see. So you see it works it is very easy to do, and it works 95% of the time.
Right.
But we are helped because Corning since 2002 show cyclicality.
Yes. Yes, you can see the cycle.
Cyclic mode. We will see in with the SP 500 since the low of 2003. We will see the trending mode, and in that kind we can in that situation we can spoke about the underlying trend, which is another application of the envelopes and of the system. You see here, for example, Essilor is the big international French corporation which produce spectacles. But you see the parabolic move.
Right. That yellow line.
So I don't want to say it is an explanation. It is maybe an explanation, but at least it is for me a psychological crutch. It helps me to think. I have some understanding of how the market works.
Right.
We can say the next
Okay.
two slides.
And I see Marco asked what was the time frame of the previous chart. Marco, that was from 2002. I think that's
2002.
that's
That means 2000.
2002.
Yes.
Yeah, I hope that
If,
answers your
if the
question.
law is 2002, 2018, that means 16 years, 8 times 2 years.
Right.
Because
So
you have the concept is to have always the division by 8 of the time frame, price frame.
okay. Hopefully that answers Marco's question. So let's look at the Fibonacci series, the first 10 numbers.
Okay, if you just theory, if you plot the Fibonacci series on a chart, you have that between 0 and 10. After that, between 0 and 100, you can go. Let's say it is parabolic. It means that the division by 8, from my point of view, it is not carved in stone. From my point of view, as I told you, Gann has only approximative tools. That means at the time, when he used division by 8, it was an approximation of the Fibonacci series division, because at the time where he worked, all was done by hand. He had some heads, 5, if I remember well, he has 5 heads, but everybody has done his work by hand, and you could not change easily as we can do with a computer. So he needs tools. He has developed tools in the condition where he worked. It is my opinion.
Right.
So,
and here's the Fibonacci series to 100.
When 100. So when it means when whatever the time frame, when in a time frame the division, the price fluctuations follow more or less a parabolic or Fibonacci series move, the division by 8 gives you a good approximation, which is why we can say that the vibration is relative, and gives you good results. From my point of view, it is not very, I don't know if it is very scientific, but
yes.
I told you it's for me a psychological crutch, and
yes, something that works, gives you confidence.
Parabolic, but fact it works. So I think there is we are not very close from the truth, because it works. Practically, it works most of the time.
Right. And here's Corning with those 2 parabolic moves.
Yes.
Right. And here's an explanation of that.
Okay. Explanation, yeah.
Okay. So Fibonacci gets included. Let's speak about building the envelopes.
Yes. So how to build the envelope? But first, you have to determine. You have to do 2 things. First, to calculate the central moving average, and then to add a concentrates factor. The problem for you could be how to determine the concentrate factor. You see here that in the theory, in the methodology, I would say, when you are Morel and Prom is an oil company in France. They are building machineries for the oil industry. You see that when you are in 25, like Facebook was in 37, was 30 at the first IPO was 37.5. Same thing, 25. You are in the price range, fractal of price, that depends on what you want to use as a word, 0, 100. If you plot 0, 100, it gives you not very interesting information. So you have to zoom in by halving. You have 1 time, 2 times, 3 times, up up the time you got exploitable information. So we can see the next. In the previous, if you are in the price range 0-100, your octave division by 8 from 100 is 12.5. But here we have divided by 2 times, and you see that here you have more information because you fluctuate between 0 and 25. So the division by 8 gives you 3.125.
Right. Okay.
That's you say okay, that should be my octave, my vibration. So here you plot in the middle, you have the censored moving average 255. Here we are in daily. So 255, you add to the censored moving average 3.125, you subtract to 3.125, and you got your 2 envelopes.
Okay. And that's your first.
There is no mystery, and it works 95% of the time.
Right. Then you move forward and you build the next envelope.
So I mean, yes, the next envelope. So you divide by 2. You have divided the envelope 256. You divide by 2. It gives you the envelope 108. You plot the censored moving average 128, and you add the 1/2 of the octave 1.5625. You subtract the same factor, and you have the envelope automatically.
Right.
And you see it works. You do the same thing with the 32, the 6 weeks. Here, 6 weeks envelope. The 6 weeks, you do the same thing by halving the constant width factor, which is here 0.78/125. It is always, you will find, if you use this system, you will find these factors again and again and again. It is always the same number.
Right.
So David asked a good question on the thread, trading with Hurst Envelope. He asks me, why have you chosen the 32 envelope and not the 64? Because logically, halving the duration, I would have chosen the 64 envelope. Well, it was 10 years ago, so I don't remember exactly why. I will give you a presentation. Fact is, building of envelope, it is written in Timing is the Key, chapter 3 from Profit Magic. The aim of building envelope is to generate contact points between the envelope and the envelope boundaries and the price. At the time, I have noticed that with the 64 envelope, if I have taken the 64 envelope with the same octave, they had much more less contact points. So it's but it's up to you. I think the best way with Sentient data, and I will do that later, because as I use Excel, it is relatively heavy for working. It took some time.
Yes.
With Sentient Trader, I just have to change a parameter, and it's very quick. we see the result very quickly, and I will check the both solutions. But I think as I have made produced thousands of charts, this is the best system. I told David, it is I could say the nominal system, the nominal envelope or the discovery envelope system.
Yes.
You can refine it sometimes, but most of the times it's excellent result.
This works well.
So using the same system, you can see something, because we are now in the using envelopes for analysis. So envelope have the first result is to rationalize and hierarchize your information.
Right.
It means here you have, this is the Bovespa, the Brazilian index, and it is interesting. It gives you the rationalization, and hierarchization of the waves and of your cycles. It's automatic. I mean, sometimes you have discrepancies we can discuss of, but most of the time you have an automatic, I would say, classification of the wave. That means the cycles you see here are of the same order, nature, degree, you can name it as you want. It's very clear. It's very clear.
Yes.
So in the hierarchy, the B3, B2. B2 means if you see B2 on a graph, it means you have only two. The price has touched only two different envelopes.
Right.
I have put something like T3 plus or T3 minus or B3 plus. It means T3 means it's okay, and if we have a spike, a big spike, I'll say if price is very long from the envelope, above the envelope, I write T3 plus. If it is slightly under, I write T3 minus. But it is not really important. It's just to refine the classification.
Okay.
But okay, this way you can we can see the next slide.
The M shapes.
So you can rationalize M shapes.
Yes. Through
Because
the
you
use
like
of the
M
envelopes.
shapes.
I do, yes.
But it's interesting because if you read a cyclic analysis, Hurst doesn't write about cycle but waves.
Right.
But waves, and he shows waves. He speaks about what wave amplitude, wave phase, and so on, and not from cycle. Right. I was surprised because I read again cyclic analysis this Sunday, and I discovered that I have not noticed. You can also use the same system to if you use harmonic patterns.
Yes. So you're looking for a harmonic pattern forming at the envelope boundary.
Forming, and you have the fractal, we say bracket fractal system, which means big waves are made of little waves, and big M shapes are made of little M shapes, and so on. Another interesting point is you can visualize and compute the underlying trend effect. In this graph of the Dow Jones, you see that to speak like Hellas, the Dow Jones is in trending mode,
right.
Not in cyclic mode. He is partly in cyclic mode, but is in trending mode, and you can see that in fact you have the depth of the 1 year envelope is 1,500 points, and that at the time of the graph, the progression of the Dow was from more than 10,000 points. That means that you can evaluate that the underlying trend has had 4 times more to the move than the envelope itself.
Okay.
That means the day-to-day or the month-to-month variation, the impact of this variation is more important, is less important than the underlying trend. And you can more or less evaluate the underlying trend with the Gann angle. You see?
Right.
Progression. If you draw the angle from 0 point to the next, to the other corner, you have it follow more or less the 1-1 angle. See, in that case, it's not always the case, but in that case, so you can estimate more or less. I think it helps. What you think, but I think it helps.
Yes. Let's speak about trading, shall we?
That's what you can use for analysis. Yes. About trading. Trading envelopes allow you to calculate a realistic risk-reward ratio, because you know what is the depth of the three various envelopes.
Right.
The principle is that you go from one lower boundary to the next boundary.
Okay.
You can also manage your stop loss level.
Yes.
The depth of the envelopes, the half depth, because in fact the depth of the envelope is 2 times your parameter.
Right.
You can use a subdivision of this parameter, which I do most of the time, and you can use also the last low or last top of the move.
Right.
Within the envelope. It depends. It's up to you. You can also, it is very useful to decide if you can enter or not in a current move.
Okay.
So, you are not at 8 o'clock, or I don't know when you start. If you see something, you say, well, I can play or not, I can enter or not, because you can estimate your risk-reward ratio. I remember a guy on a forum in France. He said, "Oh, Alain, you had balls." No, I said, "No, I had balls, but not in this case. I just put, I entered in the DAX with stop loss 8 points under the entry level, because I estimated that it was because the move was up to 60. Well, it was, so the move was up the central moving average 156 with nothing up, and I could estimate that, well, it could be that we would reach 62.5 points higher. So my ratio was good, and I said it was a little casino, but it was an educated bet, you know.
Right.
And so it is why when I trade mostly the Dow or the DAX, because I do not trade SP 500, because it is it is easier to to win 20 points on the Dow than to win 2 points on the SP 500.
Right. Okay. And let's speak about these 6 envelope boundaries and the 3 centered moving averages.
Yes, but in fact, you use more or less, I use more or less, the 6 envelope boundaries and the 9 centered, the 3 centered moving average as the same way you can use the support and resistance lines from Gann on the horizontal lines. You are seeing it's more or less the same thing.
Right.
So we can see that on for the.
So let's have a look at some examples here.
It was some examples. It's in trading view. It is intraday trading. So you see that the stop loss was at the last. I enter at roughly at the low. I put the stop loss at the last low in that case, and you see that here's entry, yes, and you see that it goes higher. It goes higher because why decision for entry and decision for why I was because why is the entry? Because the two envelopes were up. Right. And the 32 envelope and the 120 were up, and the 256 is neutral.
Right. So the blue envelope, the 32 envelope, and the pale brown are both up, and so you're interested in a long trade, and this 256 envelope is neutral. So that indicates a long position. And I see here you've set your take profit at the level of the top envelope there.
Yes, yes, but generally I put take profit is not really for me a take profit. It is a target more than a take profit, but it is written take profit in the system because we can notice in other charts that on intraday trading. Up or down very quick. You can have a 50 point move in some seconds. So if you are not in the move before, you cannot catch it.
Right.
So I did this point by using it, and I have taken this.
Yes. Let's have a look. We're going to have to speed up a little because we're running.
Yes, okay,
so over time, let's have a look at our next one. Here we also have
the same, more or less the same. Okay, you see the three envelopes are up, so long.
Right. Okay, so your 3 envelopes are up and you're going long. And I think there's a detail of that one here.
Yes. So it's more or less the same thing, the angle is not. You can also see with the angles.
Yes.
See the acceleration of the speed is not exactly the same. Just to judge, to go quickly. Okay.
Now,
we can take the next.
Are you seeing? I think this has stopped updating my slides. Has it? Are you still seeing the slide with writing on it? Right, let me quickly.
It's always up also.
Yeah, sorry about that. The screen sharing has frozen, so I'm just going to quickly restart that.
Yes, I understand.
I'm just going to quickly restart that. Alain, while I'm restarting that. There's a question that I have, which is that your 3 envelopes are are all displaced the same amount. Is that correct? They're all displaced
Yes.
by 16
That's a trick.
bars.
That's right. That's right. I
That's
have
right.
written about that on the Hurst thread on the forum. It's just a trick. It is not exact. It's just a trick to have the three envelopes. It works relatively well on intraday trading for 1 day and 5 days. But after that, the discrepancies doesn't help. You cannot use that in the long term. But it helps for me. It's a crutch to solve the lagging part, you know.
Right, right. So, and that's why in Sentient Trader I have enabled you to displace these envelopes by different amounts. So you can do exactly what Alain is doing here and displace all of your envelopes by 16 bars. I'm just trying to get the screen back. Something strange going on with this. Here
Okay,
we go.
I think we could, if we have some time, we could answer the questions.
Yes, right. Let's. If there are any questions, please let. I see Marco says, which technique do you recommend to align the centered moving averages if you do? I think the answer, Alain might want to add to this.
Yes.
They're not actually aligned, but they're displaced to the left, aren't they?
To the left. Technically, you have the price, which is in the right position, the 32 envelope, which is in the right position, because the central average envelope is in the right position, displaced on the left from 16 points, and the others is 128 and 256 are displaced on the right, you know, but they are displaced on the right or displaced on the left from only 16 points and not 64 and 128. But it's just a trick. It's just a trick. It's just
right.
Just a trick. It is not the position of the envelopes is not exactly where there should be, but it helps. As you see, it is not so bad.
Yes, it's something that works.
Not so bad.
I think I've got the screen back, Alain. If you'd like to mention anything about, here's a trade in the Nikkei.
It's all envelopes are up, so you go long. You can go long.
All the envelopes are up, so you go long, and here it is. Here it is again.
So,
okay.
Which is interesting is that is with the envelope. You see, you are, which I call when you enter here, where I entered. It was during the move, though I was not the beginning of the start of the move. But which is interesting is that you are in a free, what I call a free territory. You have no more boundaries between the boundary of the 128 envelope, the ochre one, and the upper boundary of the 256 envelope. So you have no resistance, no theoretical resistance. That is why I entered there, just to see. And you see, and I sold because there was a touch and the price go slightly backward. So to secure my gain, I sold.
Right.
That's the idea.
And here we've got a short in the DAX.
Yes, short. So you see that here you have a cyclic trend on the within the 128 envelope, and we were sure. Yes, I put the stop loss at the roughly at the top of the last at the last stop, and I was entered. It is as I entered at the former top level, the little one on the left, and after that you see, I sold because we reached the central moving average 256, which is a resistance.
Right. Okay. So your centered moving average works as
so in that
resistance.
case, you can have also two lots sold when you one lot when you reach the 256 average, and see what next. Same thing. Stop loss are on the last top, and
Yeah. That's your stop loss. Okay. And
we can see the next ones.
Here's another short.
That's really interesting, because it is a case you will find that the price, there was a vertical move after breaking the lower limit of the 256 envelopes. So I answered yes. With experiences, my guess is that we go up to the 31.25 points. That means we could have 31.25 points or 62 31 points.
Right. So you're expanding.
That means you have a doubling. You have an expansion, a doubling. You have
doubling.
Theoretically, you could have a doubling, at least the move of 50%.
Right.
You can have the relation with the well-known 50% move. Retracement of Gann retracement.
And here's
same thing.
Here's the same thing, where your envelope, the price is breaking out of the envelope, so you double the size of your envelopes, and you look at a continued move. Okay, and I think that is.
There is no certitude. There is no certitude, but you have scenario.
Yes.
So you can say, well, I have doubled my amplitude, so that should be the end of the move. Sometimes it is not, but that should be for now the end of the move.
Right. Okay, so Alain, I see there are a few questions. I think Mark is saying, do you consider volatility? I think that's a question from Marco, and Bollinger has 15 rules. I see Jim's speaking about Bollinger. If anybody has any questions about the use of these envelopes, then let us know. And the webinar's already fairly long, so we're going to have to bring it to a close. If you have any questions about envelopes, let us know. Alain is on the forum, and I'm sure he'd value any feedback on the forum, and would be happy to answer any questions there. And with that, let me close this presentation, and let's move on there. With that, I'm going to say thank you very much for joining us. Thank you for being on today's webinar. Alain, thank you very much for sharing your envelope approach. A very interesting, very different way of approaching Hurst cycles. Thank you so much for spending the time to do that today. And for everybody on the webinar, thank you for joining us. I wish you profitable trading over the festive season. Have a good Christmas, everybody. We're going to be back. This is our last webinar for 2016, so we're going to be back in the new year. And we'll be sending out emails to everybody about the when we're starting again in January. So thank you very much for joining us, and have a great festive season, everybody.
Okay, Merry Christmas to you all.
Thank you very much, Alain.
Thank you.